Hey there, this is Jacob Wood with Elliman Real Estate, and I have for you here the Q3 2021 Manhattan and Brooklyn market reports from Elliman. Now, since the start of the pandemic, the number one question on the minds of both buyers and sellers with these reports is what sort of savings is the market offering right now with regard to the pandemic? Now, we remember in last summer, buyers who were comfortable enough with the situation to actually buy were getting discounts of about 10% off of the year ago quarterly prices. Even as recently as last winter, buyers were getting discounts of between 5 and 7% off of winter 2019. In last quarter's report, Q2, we saw that that gap had continued to narrow and that was likely the final quarter that buyers could expect prices to be lower than they were the year ago prior quarter. And we see that's borne out. Q3 2021 is the first quarter since before the pandemic that Manhattan median resale sales prices were above where they were the year ago quarter. Now, 5.4% above. Long-term value appreciation in New York City is about 4.5%. That's been true over the past half century. So we see that 5.4% rise is indicative of a long-term sustainable trend. Now, if you're a buyer, we see that these prices are still not quite back up to where they were before the pandemic. So you are being offered savings relative to the price apex of 2019. And in a market that typically gives 4.5% appreciation, a flat, slightly down market versus 2 years ago is real savings for a buyer, especially in a low interest rate environment. We also see that activity is the highest it's been in 32 years. It has been 3 decades since we've had this many closings in a quarter, over 4,500 in Q3. That is a unique situation. Most low price environments are low price because they are perceived to be high risk. Maybe they have high interest rates. Think about last year, low prices, they're low for a reason. Buyers are being given the opportunity now to buy with prices low relative to 2 years ago. A sign of long-term appreciation versus 1 year ago. Low interest rates and low risk. I mean, everybody wants to buy right now. So if you're a buyer and you're looking for, is this the start of a long-term trend or is this a blip and things are going to correct? What we want to pay attention to is this chart here on the front page of the report of sales activity relative to prices. And the best time to buy, which we know with the benefit of hindsight, 2012, 2013, is when activity is higher than relative prices. And then the apex of the market, when you're poised for a correction, is when those prices are high and buyers start to shy away. We saw that beginning to happen in 2016. And so if I'm a buyer and I see prices higher than relative activity, I might shy away. But if I see that activity is higher than relative prices, that is indicative of the beginning of a long-term trend of appreciation, and that's when I want to do business if I can. Now, Q3 2021, we see, was the first quarter in over 5 years that activity was higher than relative prices. Where were we the last time this happened in the cycle? We were at 2011. Who could go back to 2011? Who would go back to 2011 and buy if they could, right? So, with regard to this standard, that's where we are now in the real estate, in the long-term real estate cycle. Now, if I'm a seller, and my question has been, am I going to make enough money to make it worth it if I wait a year, if I wait 2 years to sell? Well, last year, the answer to that question was easy. If you could afford to wait, you waited. Now, if you're a seller looking to upgrade, well, you're buying into the same market you're selling out of, you may as well do business when it's the best fit for your life. In fact, the real estate rebound post-quarantine has been driven by existing owners taking the opportunity to upgrade. People like yourself, you may as well make those transactions when it's convenient for you. If you don't have a subsequent purchase to make, then what you're looking for is low inventory You're looking for a price increase, so you're not leaving money on the table. And you're looking to make sure that it's not the top of the market. If it is, you want to hurry up and do business. If it's not, maybe you can afford to wait. Well, months of supply, the absorption rate is at 5 months. A market in equilibrium will have between 6 and 9 months supply. So for the first time since well before the quarantine, we actually have a shortage of supply available. If you're a seller, that's a good sign for you. Prices are 5.4% higher than they were a year ago, indicative of long-term sustainable appreciation. So is your home likely to be worth more next year than it is this year? Sure. 4% more, 5% more, which has been true on average every year for the past 50 years. And so you're not leaving a disproportionate, it's unlikely that you're leaving a disproportionate amount of money on the table selling now versus a year ago. It's just going to be that 4 or 5% that we can expect your home to appreciate every year. The market right now, as active as it is, 4,500 closings, is driven by native New Yorkers who are looking for value. And so it's not the irrational exuberance of 2015 that sellers loved. You're not at a price apex, but the buyers out there, even though they're looking for value, they're being given that value with the low interest rates and the prices being low relative to 2019. Your home is worth at least 5% more than it was a year ago, which is what you're looking for if you're deciding if now is a good time to sell. So by and large, the market is very active. It is safe for buyers. It is attractive to sellers, and New Yorkers are acting accordingly. If you'd like specific information on what the market looks like for your home, for the specific home you're looking to buy, let's talk more. This is Jacob Wood with Douglas Elliman Real Estate.